FOMC or any kind of Fed announcements will always bring in a lot of participants to the markets, which makes for great volatility. And everybody knows great volatility will be will produce the best trade opportunities like today and the day before. Um, and as you can see, during any FOMC, if you go back and take a look, this is information that is freely available. Just look at every FOMC, which is this is a 30-minute chart, but it was here. Generally speaking, do not trade FOMC prior to the announcement date. And anybody who's new shouldn't trade the announcement because that's really tough trading because it's so fast, it's so quick, and if you're not fast enough, you may take some beating on those days. But once the FOMC is finished, produces really nice results. The next few trading days after FOMC is very nice to trade. So, and generally leading up to FOMC is always nice too. And because what's going on is a lot of jockeying by um, traders. I sometimes say position traders, but what I mean is traders who like to build positions as the market's unfolding into FOMC, getting near it because they want to anticipate the move up. So Philly Fed came before FOMC here, and it was on the night. It was on September 16th, and the Philly Fed announcement took us up into the FOMC, and the FOMC announcement caused a pullback. In other words, a sell-off. Now, what's important to know is that FOMC or any kind of Fed-related events are arguably have the most impact on index futures or possibly other markets as well that are in one way or another connected. So these are arguably some of the most watched reports that come out, economic reports. Uh, we don't really pay attention to what's said in the reports. What we care is what the reaction to of the market is. We don't want to play economists. We want to see what the reaction to the events are. That tells us all we need to know. Basically, the market participants will tell us in other words, the market will tell us what they think of the report, and that's all that matters to us. And so we had the Philly Fed Index here. On Monday, I released a video saying that I'm hesitating to. I see that there's a lot of selling going on, selling volume coming in, but I'm hesitating to publicly announce a swing trade because until price goes way below the Philly Fed, and possibly if I was saying that there's a possibility, a potential of a bearish day if we get below this zone, then look to fade the rallies back into this zone. That didn't obviously happen. We instead what we had was the opposite happened, which is usually the case. If what you think is not going, it doesn't happen, the chances of the opposite happening are quite high. Which, as always, that's great information. Now, when I made the video, it was around this time. Okay, it was around this area. This is the 24-hour chart, and soon later, it was quite obvious that we dipped into this zone, the Philly Fed zone, held the lows of the cash session, and then started rallying. Woke up in the morning, saw this price action, knew exactly what was going on. We came back and tested this high here, found support on there, and took off. So really, if we were going to sell off, we shouldn't have gone above this. So that told me we shouldn't have gone above that high because we'd already broken that high. And as you can see, we came back up to it and tested it a couple of times. So I knew that strong possibility for either a tight range day or a good trend day was possible, particularly knowing that position traders like to build positions if there's a Philly Fed announcement prior to the FOMC. And so here again, the FOMC comes out. Here's another zone, and we're struggling to get above it, and we broke below it, and this made actually a great trade here for intraday traders. Now we're bouncing. We've bounced twice off of this zone again and held support here again. My point from this video is if we can break this low, then look for an extreme trend. You look for a nice trend day. So have your trend strategies ready. We break below this convincingly, not just a dip on one bar and we pull back into it. We break below this, then there is going to be potentially, because we have this gap to retrace and retrace all the way down here, we're going to have a good trend day. It might not happen on that same exact day, it might happen a day after, but there will be a good bearish trend day if we do break below this low. So these are, if you don't follow economic reports, I would highly recommend that you follow the FOMs, follow it the way, and you can draw these zones on other interval. This is ES, but I would do it on other instruments that you follow as well, related to these markets. FOMC, Philly Fed, Richmond Fed. These are events that you should pay attention to. Uh, there's several others that are Fed related as well. You should pay attention to those as well. And here's the daily charts and what's going on this day that we rallied. Volume was quite low compared to prior days, and then volume picked up on the selling up here, which was obviously FOMC. We're going to pick up some volume, so we don't know how much of that is selling. The next day, volume slow on YM and ES, but on this day, volume was pretty high on NQ, and that was pretty obvious that there was some selling that went on that day. And on this day here, we have again high volume, and it was obvious that we did rally and sold off at the end. Most of the volume came in the morning, so volume is picking up as we're going down. Volume is picking up a little bit. So even if there is buying volume, they are really not able to push price higher. So this is a key area that we want to watch on the index futures. If you're into swing trading, then these are the areas that you want to pay attention to. Hopefully this helps.